Hello, everyone.
Hi.
Hello.
How are you?
Hello, everyone. All good. Apologies for not having the camera on, but mobile at the moment. So it's better just to at least you hear my voice, not to see me. But I think it's okay. It's fine.
That's the most important. That's better than video without sound. So it's better to have the sound, but not the image.
For sure.
Well, thanks for connecting anyway, Marco. You're in a pretty remote part of the world, so kudos to the web to allow this for happening, right? To be all plugged in from anywhere we are.
4G gets you everywhere.
That's right. Okay. Well, it's Unplugged 3, so it is somewhat unplugged, but we did have a few threads to share. So maybe let me see if I can pull up a couple of things on my screen, and perhaps we could just have a little run through. A little bit of macro, a bit of it of money, if you like, our dear topic, BTC, ETH, Solana maybe, and we can take it from there. So let's see if I can pull up my screen. Let's start here.
Yep. Here we go.
So I thought I'd share this. I was quite mind blown actually when I saw this. Let's just be clear and try and sort of disentangle. What is it? What is this showing? This is showing the S&P. That's the orange yellowy line over the last 100 years. S&P, right? As an index and a great indicator of equity markets growth over time. Well, it shows a line, a chart that goes up to the right, as the world likes to depict and show that that's what happens in the world. Equities keep going up. They go through peaks and troughs, up and down, but in the long run, they outperform any other asset class. Fantastic. Except if you then discount it or then adjust it to the money supply, M2, you get the chart at the top. That's the adjusted S&P. Now, for full disclosure, this comes from the chartstore.com. So it's not our chart, it's not my chart. So I'm sure there'll be all sorts of different ways to disentangle this. But I thought it's pretty compelling. So we never really think that far into, well, what does equity growth, GDP numbers, index numbers, annual growth numbers mean over time when discounted by the money supply or otherwise a form of devaluation of the value of your asset. So there you go. You end up with a pretty flattish, if anything, depreciating, devaluing curve line, which is that one at the top. Marco, I feel obliged to turn over to you to get your sort of opinion and view on this.
Yeah. When I see this kind of charts, specifically this one, or let's say specifically the one that ever involved M2, the money supply. Like for me, this one has multiple commentary, multiple arguments. I'd say multiple narrative behind it. I would say the first one is this shows why in our society we are still growing the gap between rich and poor to a certain extent, because you can see that if you have access to reach to the M2 supply, so to reach to the supply, right? So you closer you get to the supply, the better you are, just because basically you have the bigger is the discount that you can have as a power towards the economy and the financial market. And I can give you an example, a clear example of this. This chart is basically behind the idea of a Lombard loan. A Lombard loans is something extremely simple. Is I buy Coca-Cola in the 1940, then I go to JP Morgan, I deposit my 10 shares of Coca-Cola, and they give me some dollars in return. Now, if I'm smart enough, right? If I'm smart enough, what I'm doing is I'm using, let's say they give me $10. I would have used $5 to do whatever I want. And then with the other $5, I buy another share or other 5 shares of Coca-Cola. And I keep doing this. Why? Because if you just see basically what this chart is telling you, is that there is so much supply in the market of money a certain period of time, then the value of your stock basically get aligned with the value of the cost of life, which whenever it goes up, the cost of life goes up, is because they have printed more money. So there is the N2 supply just go up, right? And then there is a revaluation of the stocks. So you see here in the green line that's, the valuation of the stock goes down compared to the money. That means that they have printed so much money, right? That effectively that value is not the same as it is in the nominal. The nominal is the orange or yellow, whatever. And you see it's going up because it's compared against dollar, which is decreasing in value, but increasing in quantity. So that's why the push up, right? The rise in price, which is the yellow, is not as big as the printing of the money, which is the effect that generate the green curve. The green curve is because there is so much of the assets, like a balance, right? Like you put in the 2 arm of the balance. You have so much money going on one side that even if it's the price of your stock is reevaluating, so it's growing up in price. On the other side, you have so much more money has been printed that effectively the true value, if you want to give a new terminology, a new metric, the true value of what you have, it's not going so much higher than that. The difference is that now it's not $10 anymore, or it's $1 per share. Fast forward 150 years, now it's $100 or $200 per share, right? Because the total amount of money is so much more that to have the same value or the same portion of the money that it was at 1940. In 1940, today is so much more. I think we have another picture. It was extremely simple to see, like visual. There was how much was worth a gold coin in the 40s, and how much money is worth now that coin, right? And you see that one coin was like $5, and today is like 200, right? That's the effect. Is because gold is gold, in the sense of it's compared against dollar at the time, but you do not have a huge amount supplied amount compared to dollars. So if you look at this, it's like the gold is a finite asset, dollar is an infinite asset, and during 50 years, we have printed so much dollars that to have the same fair value, now you need hundreds of dollars, and that's what this chart is saying. And that's why if you have cash, or if you're rich since the beginning, it's so much easier to be rich later on, because you can just use the same asset that are finite, like shares, like gold, like Bitcoin right now, for example, that compared against something that it's infinite by design, like dollar, it will just reevaluate in time.
Absolutely. Well put, Marco. So I think basically we're agreeing that equities might not really be what it feels like, or what we've been told this far. Just looking at a notional number without understanding the bigger picture is misleading.
Yeah, because we live in the yellow curve, right? We live in the yellow curve, like this is what we are seeing, but the reality that we are facing is the green one, where everything is more expensive with the day.
We live on the green curve, really. We're told to believe into the yellow curve, but we live in the green curve. Yeah. Okay. On that note, I'm
exactly. So we feel that we perceive. Sorry, just wanted to we perceive. We look at, you know, as I was saying, you look at the green one and say, oh, the stocks goes higher every year, so I should invest there. True. But what's the actual value of wealth? Because if you are, everything is based on dollar, and everything now becomes more expensive, and everything becomes, let's say, more, everything gets diluted, then you are getting diluted as well in your stocks, because that's how it works.
That's a great lesson to treasure and to share with friends and family if we're still with them over the festivities. It was great for me to hear my mum talk to her friends over the phone over Christmas, telling this story. So I'm orange pilling, or at least helping my own inner circle understand what they think their assets may look like and how they may be performing may not actually be what they think. On that note, I thought I'd share a video. I'm not sure if this is going to play out, so stop me if it's not loading. It's one from, it's a 50-second video from Robert Breedlove on the money supplies story, which I think is quite compelling, the way he really visualized it in a concrete, relatable example. Let me see if this can play out. 1 second.
$60,000. We printed $6 trillion in 2020, right, in the U.S. Average annual U.S. salary is $60,000, roughly. That's 100 million years stolen, right, through the counterfeiting of currency. If each human works from the age of 20 to 70, so that's about 50 productive years per human, the counterfeiting of $6 trillion USD equals the stealing of 2 million human lives worth of productive labor, right? This is to try to make it real, like it's a real massive problem. And then, of course, the plausible deniability that's built into inflation, right? It's Putin's fault. It's Beyonce's fault. It's the supply chains. It's everything but the central bank.
Did that come out? Did that play out?
Yeah, but you're not sharing your screen anymore, so I don't know.
No,
if you have
that's deliberately. So let's just zoom out. So what Breedlove said, in 2020, $6 trillion were printed. If the average US citizen earns $60,000 a year, by printing in that instant $6 trillion, if you relate that to the real world economy, it takes 100 million years of productive labor work to obtain that figure. That just gives, you know, when I speak about these numbers, it is difficult to really visualize what millions, billions, let alone trillions actually mean. But back to that chart that Marco was elaborating on, you know, when we're factoring in the money supply, how that is growing, and what that means, it just it obliterates, it evaporates all of the productive labor of our real world, you know, the value of our real world assets. Any thoughts? I think it's pretty compelling and self-explanatory, but yeah, I thought it was interesting to share.
Yeah, it's very interesting, and as you said, you can seems like orange pilled when you talk about like crypto and the problems we're facing as a, let's say, global economy. But what yeah, my main problem is I think there is a real lack of financial education. I'm not saying that people are not educated, but we don't educate you to finance in general well enough to understand how central banks are working, oh, the BC is working, and I'm quite amazed that when I talk to some folks around me, usually when I say, you know, money can be printed out of thin air, they don't believe it first. They're like, no, no, it's backed by something. Like some people will tell, yeah, no, we have gold. I say, no, we don't have gold since, you know, decades, like since Bretton Woods, there's no gold backing it. And they said, yeah, but what is it? And I said, there's nothing. Like it's just our trust within those institutions that keeps the value where it is. But if you start, if we don't believe in it anymore, like it can collapse super quickly. Like I'm not like fully, you know, saying that we're heading to you know, mass recession and so on. That's not the point. I'm just saying, like, people don't know. That's just it. Like they don't know how you print money, how inflation works, and the more people are educated, I think the more we will head toward something that will be maybe more healthy in the future. So that's what we're doing this year, right? Trying to tell people, because I was part of those guys, not so long ago, like 2 years ago. For me, it was like really blurry how money was printed.
Maxime, I studied, I majored in economics. I spent 20 years in banks. Actually, just over the holiday period, I spoke to 2 senior managing directors in banks I was part of. I'm not going to name names here, but I guess it won't be difficult to figure out which bank that was. One of them is fully in crypto. One of them can't understand what the investment thesis is, just cannot understand what is it. It's all about scammers, money launderers, and Sam Bankman-Frieds. And the latter person is still a managing director at a major US investment bank. What does that tell you? That, you know, it is, until you see it, you don't really get it. You're just vacuumed into status quo thinking, and it is what it is. We are where we are. We're still at the very beginning of the journey, and well, that's what we're here to do also, isn't it? It's to share some of our views, insights, and hope to get more people to wake up. Marco, I was expecting to hear something from you. Any other comments, or you, Dagia?
Yeah, I was thinking, I was trying to get something in my mind, you know, to think about something that, let's put it like this. I think that, you know, the fact, Maxime was extremely right when he's on point, when he was saying, like, you know, people do not understand or do not believe. It's like, it's kind of different, because that doesn't, first of all, the system, right, that we have has not been built, well, that we had before Nixon shock, okay? The system that we have when we depeg the dollar from gold, okay? So just a little bit of a history here. Bretton Woods is where, after World War II, basically we set up dollar as the backing currency of the world, okay? So everything was dollar denominated. Oil, grain, sugar, any commodities, any stock, any debt, public debt, okay, country's debt is in dollar. Fine. That was kind of always happening in history, right? Like the superpower always put their own currency as the backing currency of the world. Then we had this idea, and this was working to a certain extent, because first of all, it had always worked, and second of all, it was a way to actually denominate everything under one single value, and that value was represented by the value of the superpower. Okay, so there was, as Maxime was saying, there was something tangible to, you know, for people to understand. But the moment we depegged from gold, because there was simply not enough gold compared to the productivity of the country, and now we just put something out of thin air. We print money out of thin air. We print money out of belief, out of the belief that this works. And that's why it's super difficult to understand. Why people do not understand, because they do not want to have it on top of belief. They want to have something solid. So it's kind of a circle, but it's the belief that there is something stable that that sustain the whole system, but there is no actual pegging or backing out of it. And the reality has been that when they completely crashed the financial system in 2007, 2008, what they did overnight, they said, well, we're going to print as much money as needed, right? And they didn't need to do any big, any big meeting. They didn't need to do any votation system, any public appearance or whatever. Nothing. It was just, well, money is virtual. We print it. That's it. Because the supply can be infinite, and we regulate it. Okay, we regulate this basically with a knob. The problem with that was that's the moment for me, and this is where maybe people could understand. We detach finance to the economy. It's not just the gold, it's detaching finance to the economy. Now we are not anymore attached to the economy anymore. Finance and the money supply is completely made on paper, is made out of necessity of just the financial system. It's not made on top of the economy. And the explanation is also the proof of that is that it's impossible today to repay some countries' public debt. US has trillions and trillions in public debt. It's impossible to repay that debt. Okay, it's impossible. So what does that tell you? If it is not possible to repay something, a debt that you have, well, then it's as if you don't have that debt. So effectively, that's virtual. But if that money is virtual, then all of the money are virtual. And that's it. It's not, but it's difficult because then people do not accept it because say, well, then, wait, what does that mean? Right? I'm going out, I'm doing hard labor, and I'm getting a salary, as the guy was saying. That's real. That's solid. I can see it. It's not virtual. It's not belief. It is hard job. But that because it's still part of, the production system is still hold to the economy, is not tied to the financial system, right? So as I was saying before, the printing of money is completely detached from economy and is tied to the financial system, while the production side is completely tied to the economy. And we are just having to use the same, just happens that we are using the same dollar or the same denomination as money to both to sustain the financial system and to give to pay for the production. But those two words are more and more detached to from each other. I don't know if I cannot make it more clear because it is as it is. I mean, it is like exactly like this. It's those two words that are getting detached. They were parallel. They were together before, but since we remove the pegging, those two words are going in divergent lines.
It's crystal clear to me, Mark. I think we've said this abundantly now, and in fact, hopefully not. It won't be long before we'll release some of our sort of zoom in seminars on money and all of the monetary base issues that you're surfacing right now. But it's I think the argument is pretty compelling and straight on. Let's see if I can actually, as you were elaborating, Marco, I was trying to resurface a chart which again backs up in part your word. Let's see if I can do it this way. There you go. So that's debt historically over the last 200 plus years, and you can just see. I mean, debt is good, right? We need debt for our economies. Although it looks quasi zero, it isn't zero. There's always been debt in societies. It's healthy, so it's a healthy way to raise money for commerce, for business. The question is how to keep a lid on it, and what happens when it escapes. What you can see to the right-hand side of that chart. So starting with 1971, Marco, as you say, from the Nixon shock, and all the way up to the right, you could just, you know, if you show this chart without putting any titles, names, or nomenclature around it, you'd probably just think it's a meme, Bitcoin, crappy token that we're trying to sell. That is the chart of the US debts. That is the chart underpinning the worldwide economy. I think we've battered this topic to death. Hopefully, whoever will be watching should have a fairly good idea as to what we're trying to allude to here. Let's move into crypto a little bit. So I thought we'd start with the king in town. It's been quite quiet actually, the Bitcoin market. Marco, you'll tell us a bit more about the market, but I'm not going to talk about the market actually and the price. I thought I'd share a couple slides that I find quite compelling as to the health or the status of the ecosystem. Again, I'm going to share a different chart. And two things in particular I just wanted to quickly run through and then open up for debate. Let me go into chart. Okay. So first, if the chart loads, great. The hash rate, the measure of security and decentralization to a degree, how Bitcoin has been mined across the board, not from one centralized computer sitting in a main city, Manhattan, London, or wherever it may be, but an indication of how the security of Bitcoin's blockchain is just increasing over time. No matter what the market price is, I find this very interesting and compelling to see how that hash rate just keeps going up to the right. So I'll just pause there for a second, or maybe let me just share the second screen, then we can debate on both. The second shows where the Bitcoin supply, or what the supply market looks like today. What this shows over time is how liquid or how long wallets and Bitcoin addresses have been holding on to the asset. Obviously, at the very beginning, very few people started holding the asset, and it was, you know, it had a very short time horizon in people's individual wallets. As we go out to the right, to the right, you can see we've now reached the 80% figure. What does that mean? That means that 80% of the minted available Bitcoin supply has been stored up and is not on the market effectively. It's not on the market for trading. If anyone wanted to make it available for sale, they would have to take their cold storage out, plug it in, move their Bitcoin back to an exchange and sell it if they found a price they'd be willing to sell at. I find both of these charts quite compelling for different reasons and depict the supply side and the security side of the market. Again, I've not mentioned price, but maybe Marco, you could take this and put this together with the market sentiment and give us your own angle and perspective. And please, David and Maxime, chip in with any thoughts you may have.
So thank you, Francesco. So on my side, I think, you know, especially the first chart is important. The second one could have different explanation in my mind, and it would take probably a bit more time. But the first one is telling actually a story, and this one I know because I tracked a bit more the Bitcoin mining industry, and it tells something that it's kind of important. It's very important actually. First of all, if you want to buy Bitcoin, there's two ways. One is you buy Bitcoin. So say if you want to hold Bitcoin, You can buy Bitcoin or you can mine Bitcoin. Okay, so if you mine Bitcoin, you mine at a price because there is a price for that, and that price people need to understand that there is a price for Bitcoin to produce Bitcoin, and the producing price for Bitcoin today, depending on where you are, the efficiency. I mean, there is a different factor, but let's say that the average it's around 25,000 and 30,000 depending on many factors, but let's say 25 in the let's be optimistic. You have a good setup, electricity cost going down. So let's say 20,000, 25,000. Okay. So if you set up a Bitcoin mining farm today and you're getting at 25,000, you see that there is a good discount, right? Now, why you see this raise, this curve going up so much is because there's more and more institutional investment in mining. Mining company has been listed to the stock exchange, IPOs, institutional investment, large banks investing in mining companies. And why they want to do so before ETFs, before just buying currency as it is because to control money, right? Or let's say an asset, in this case, money, you want to control the minting process. So I do not believe for 1 second that traditional finance is listing ETFs, spot Bitcoin, and they are accepting Bitcoin and crypto in their mainstream system, and they are letting this goes, the control of it, the production of it, and so on, to some unnamed company from somebody who's, just an entrepreneur, and nothing happens, and then they just accept this, and it's, well, yeah, that's okay. We will let go the dominance that we have and the control that we have in traditional financial system. That's not happening. What's happening is that they are under the tracks, investing and trying to push as much as possible people out. My expectation is that with the halving coming on, lots of miners will be forced to sell their business. And to whom they will be selling? Well, most probably those financial giants that will be able to get their hands in Bitcoin mining just because they will have enough money to sustain this for longer. And once they will get enough, then the price of Bitcoin could potentially skyrocket, because at that moment they will control the supply system, right? So I don't want to be, I'm not a, alternative theory or those kind of rabbit hole that I don't really like, but I see exactly this going on, and I see that they could control enough of the supply system to determine the price of Bitcoin later on. I think this is something that we should really look into.
Thanks, Mark. A couple other themes on hash rate. One is, I think we mentioned last week that 5 sovereign states are investing in mining. El Salvador, Argentina is getting close to it. I think it's Sudan, UAE, and Oman. And that's quite telling. Yes. But the other one is off the back of COP28, which has just wrapped up in the UAE. I read an article, I believe from the FT, actually, on how the narrative is starting to change on mining also as an energy source, in a way you can push the mining towards energy sources. You don't need to transport it the way a lot of our, let's call it, traditional energy gets often wasted, to bring it from mountains or energy sources into our cities and then reused. So actually there's the original backslash and negative sentiment on, Bitcoin's there to boil the oceans is starting to change quite rapidly. And the amount of innovation that's happening in this space, and using also Bitcoin mining facilities to heat up saunas or whatever may be, and reuse the excess energy is quite interesting. I can see that narrative starting to evolve in all sorts of different directions, and that's also allowed institutions themselves that are very keen on their sort of ESG narratives to give them permission for this not to be a problem. I guess they also have to work their way in and keep their own stakeholders in check.
I mean, sorry, but the the energy or the consumption pollution generated is such a stupid narrative. I don't know, like only very superficial people will understand, will get, will believe in that. Our main issue globally, not in Europe, not in the Western world, globally, is the transportation of energy, is not the consumption nor production of energy. Our global issue is that we do not produce, if everybody consume 10, we are not producing globally 10, because we do not have a power plant close to every single person who wants to consume energy. And to distribute energy is extremely difficult job. It requires a lot of infrastructure. Most of the energy is today transported. Basically, you store it in liquid form, gas, oil, petrol, right? You transport it through ships, containers, to the place where it is a refinery, and then you have the process when you transform to energy. This process is one of the most is one of the process that pollute most in the whole world. Okay, so consuming energy in the place where it is produced is 10,000 times less polluting the world than actually transporting the energy itself. Yeah. So that's, people should really stop listening on propaganda on this, because really they have absolutely no idea about the network of supply energy.
We're in vast agreement, Marco. Let's move on to the next chart, and maybe we can have an entire episode on the energy factor, which I think is interesting and can probably merit a full hour of debate. You want to give us a view on supply and maybe also demand side with Bitcoin ETFs on the way in?
This is controversial. I'm not super sure how this will go. Okay, again, there's going to be some pre-sale. Some pre-sale has already been done, so of course there's going to be some supply. Short term, I'm talking. Short term, this could be a good narrative, but the explosion could happen. Explosion of price could happen, but I mean, first there is a lot of work to do from launching an ETF and then buying the asset itself. You need to place it in portfolios, in strategies, it needs to be marketized. There's a lot of things need to happen. Long term, it's super bullish. No question about it. Short term, it could be a bumpy ride. For reference, just go and see what gold, the ETF on gold. Long term, raised the price of gold from 200 to 2,000. Short term, it wasn't that massive event. On Bitcoin, could be different. The pace of the world is completely different from where the ETF on gold were launched. Still, I would say, if you want to trade it, the event. Still do it with reasonable amounts and with reasonable money management.
Yeah. Okay. Guys, any thoughts, questions to add before we move on to the next one?
Just hold. I think that's the best way to go through short-term vision, is just have this long-term overview as more investment than a trader, I would say.
Yeah, I'd say learn, understand what you're investing in, and just bit by bit, dollar cost averaging. Don't play the market. Don't leverage. If you believe in it, stay in there. So that's Bitcoin. I thought we could quickly debate. Now, I'm not an expert on this, so full disclosure, I'm not an expert on this, but I wanted to sort of thought-provoking, just get your perspective on so Vitalik Buterin, the founder of Ethereum, is still arguably the polarizing figure behind Ethereum. Ethereum is the smart contract platform where DeFi has been built out. So I'm just trying to put out there and trying to work out in my head, if DeFi is built on smart contracts on the Ethereum network, and Vitalik is still pretty much single-handedly, challenge back please if you disagree, but single-handedly the engine, the thinker, the ambassador, the I don't know, the main voice behind the ecosystem in a way that can influence the roadmap, the evolution of Ethereum itself. Can we really think and talk about decentralized finance? How decentralized is this ecosystem really? I'm not going to go into the details of what he's proposing in this particular state. This is just a recurring theme. Ethereum says, Ethereum sees, Ethereum challenges, Ethereum wants, Ethereum thinks, I said Ethereum, but I meant Vitalik in all of those statements. But you see what I mean. Let me just stop there, and I'd just love to hear what your thoughts are on this. What am I missing, and what might other viewers, novices be thinking about?
I think there's various angles. One is, of course, one of them is, of course, the centralization of layers 2, because if Ethereum is very decentralized, I mean, that's one of their key value proposition of the network. Layers 2 are not at the moment. So when you layer 2, you don't need to embrace the ETH philosophy. So you can build it, make it centralized. I think you recently mentioned that some layers 2, without giving names, but they were centralized and only the treasury is held in the multi-sig wallet. So basically you have few guys who are holding all the treasury of the layer 2, and they can do whatever they want with it. So it's, I think, one major concern. And also the vision of layers 2, because if Ethereum is not able to scale enough, they need to implement another solution on top of it. It's not monolithic, right? It's more like they need different layers to make it happen. And you cannot control what is being done on other layers. And they're starting.
Can I just make sure I understand you correctly? So you're saying you don't have to believe in the underpinning asset necessarily to operate in layer 2s in smart contracts?
Not really. It's a settlement layer, so you'll use it at some point, but what you build on top of it, it's your, let's say, you can do your own business without. Sure.
But you need ETH ultimately as the key through which you work into the in layer 2. So you have to use it to operate in that space, right? So
you have to use it.
You are dependent on it, and therefore, if the mindset, the roadmap, the strategy is driven by one person, ultimately a decentralized world is built off a very, very centralized and polarized opinion. That's the impression I'm getting, and I'm struggling to shake that view out of my head.
Yeah, but the other way around will be true as well, because if you have a lot of volume and activity happening on layer 2, then the layer 1 is also dependent on what's happening on the layers 2.
True, yeah.
Somehow. So we see that even that's what happening with Lido, with staking, for example, like a huge amount of Ether I staked through Lido. So you can expect that. So it's not purely DeFi, but it's a staking protocol, and they will have their word to say because they own a large supply of Ethereum, and they will have an impact on the decisions as well. So as an ecosystem, you will also rely on all the builders on your own protocol, and layers 2 will have their words to say.
David and Marco, do you have anything else to add?
I would like to. Go on,
no
go on, David, go on. Go on.
No, I was just saying that from a social point of view, what you said, Francesco, that it feels like Ethereum is Vitalik and Vitalik is Ethereum. So it's I think it's something I'm pretty scared about it. I usually prefer I have a lot of trust in the technology that is behind crypto, and I feel that when we fully associate a crypto to a real person, it is. I feel that it is riskier than when it is a company, and because association because we there could be association of what the person is doing to what the crypto is.
Yeah. Marco, what about you?
I want to challenge this. People do not understand Vitalik because it's unfortunately there is a technological divide which is so big that it's difficult to understand how he thinks. He's a developer, okay? His whole world is developing. He's developing software. If you can meet him in an airport, and he's a guy with a jean and a t-shirt and his laptop. Okay, it is not Jamie Dimon with that show off his billions. Okay, this guy only care about software, and if he, instead of building Ethereum, he would have built another type of service for traditional banking system, you would not have heard him. You would have not known who he was.
Yeah.
So I was in the infrastructure of banking for so many years. Okay. And in that word, we have the pre-2000 and the after 2000. But only the inner circle, so the people inside, knows about it. The outside world has no idea of the revolution that has happened in terms of infrastructure because simply we didn't change the UI. So you have no idea what has happened under the hood. There has been a revolution, a massive revolution. And if I tell you now what that revolution was, I'm pretty sure that none of you have heard about it. And I'm pretty sure that if, like, out of the 8 billion people on planet Earth, 0.001% maybe have heard about it. But that's the reality. That doesn't change what Davide was saying is like what people perceive, and the reality, they don't care about each other. Like reality do not care about you. Okay. And the thing is, like, before we were building monolith system in terms of software design. Okay. And then after, now we are microservice software framework architecture. Now, you have no idea that has happened in your bank account. You have no idea that your bank went through this transformation. Every single bank has done it. It went completely silent in the mainstream media. He is proposing this because he sees Ethereum as software. So he's just saying, hey guys, I have a new idea. I think we could actually make it more efficient this way. He has absolutely not even one, doesn't even spend 1 minute thinking about, I am deciding about this. What's the financial impact and what's the perception? He's thinking as a software engineer. It makes only, and for him, Ethereum is just a piece of code that can be improved. That's it. Let's put it to the community. Let's see what they think about it. And if we find a better way to make it work, let's do it. And do you see how those two mindsets are basically different planets?
No, that's a great way to put it, Marco. And you're absolutely right. I mean, there's not a single person I think is known in the open public, in the traditional financial world, that sits in technology. Nobody is known, and nothing that happens in technology is really openly known out in the public. So how banking infrastructure evolves and develops is still very much a black box. So from that perspective, I completely understand what, and it's a great way to describe it. I suppose I'm still not fully shrugged off of the perception that ultimately, although he can't fully manage it and control it, his influence is humongous. He might not be able to unilaterally implement his software developments for the Ethereum blockchain and any iterations from there, but he can certainly still have a huge voice in Parliament.
Yeah, but that's on. I see this two sides. First is, yes, he should always think that whatever he says, it has a weight different than if I say it or if another developer or whatever says it. Okay, the voice is different depending who you are. He doesn't think about that, but that's how it should react. But on the other side, I think that people should really understand how Ethereum, but more generally decentralized system works with the governance. And it's not just because it's not, again, Jamie Dimon. If he says tomorrow we stop trading this asset, tomorrow JP Morgan stop trading the asset because he is the CEO and he has the authoritative power to execute that. Vitalik cannot. People need to actually vote. Now, how those two things goes together is one story, and I mean there is a white paper that you can look up and learn about how that works. But on the other side is also like a mentality. We have to stop thinking that if that figure in a decentralized system, if that popular figure says something, then we should all do that. It's based on a decentralized system. It's based on a governance. And so it's not one single power deciding and then everybody else has to follow because he can push it.
Sure.
It's up to us.
Ultimately, we're also talking of networks and communities, right? So just think of what happened when Elon bought Doge, for instance. Even if he has no access whatsoever to the infrastructure, that the effects of influential figures still have effects on the market. True. Right? So we've talked about Vitalik, and I'm happy to have heard different opinions on this. But how about Marco? Last week we shared our views on the you weren't there. We shared our views on 2023 and the outlook on 24, and I felt like we probably underrepresented Ethereum. We spoke about Bitcoin, we spoke about Solana, we spoke about the ecosystem, but we didn't really do enough justice to Ethereum in aggregate. Maybe you can bridge that gap and give us a bit of your feel as to where it is right now, with Bitcoin ETFs on the one hand and what that may mean to the market. We've covered some of it today as well, what Solana's been doing and how it's sort of resurfaced post FTX. But what's your view on Ethereum in aggregate as we go to year end and start 2024?
This year was a build year. It was cooking. And something really nice is cooking in the kitchen of Ethereum at the moment. And it's called restaking. And it has been pushed forward from Egon Layer. And to just show you how massive this is going to be, there are currently billions of dollars, billions, okay, not millions, billions of dollars being invested right now and staked into this idea of the restaking system. And the restaking will be launched Q1, Q2, 2024. And this is going to be the mainstream narrative for Q1, I would say, after the ETFs are launched. But in terms of DeFi, this is what people will talk about it. It's a new innovative way of generating passive yields, and it seems like rumors says that with restaking you can almost double up your staking yield rewards. So if you put your Ethereum in staking, as Maxime was saying, it's doing, you get today what, 5%, 4%, something like that. If you do restaking, there's a potential to go up to 10. And the amount, given that it is done on Ether and not on some obscure token, and going double digits could be the thing that it's going to happen, is the news. And restaking, I mean, we need to have a separate episode for restaking because it's a lot of technology.
I was just trying to work it out in my head, Marco. I must say, as I'm nowhere near as technical in the infrastructure as you are. I think it really would be helpful to have a quick recap on passive income, yield, staking, restaking, and maybe just dive in a bit more and help us all understand where is this yield coming from, how does it work, what are the risks involved as well, and what happens as you go from staking to restaking. With my sort of biased risk mindset, it sounds like there's more risk involved to get the extra yield, but
I try to make it extremely simple, and with the simplicity, you lose stuff. Okay, so give me a bit of leeway here. So basically, when you stake on Ethereum, people now kind of understand, right? What you're doing is you are helping the validation and the securitization of the whole infrastructure of the network. Okay, that's staking. But in order to make the whole DeFi work, you just do not need only the transaction to be validated. I send money to Maxime. I generate a transaction. Somebody needs to validate that transaction, and I pay a certain amount of gas for it. And part of it gets burned, part of it goes to the validators, part of it goes to the infrastructure. That's it. That's how it works. Money gets transferred from me to Maxime. Done. Okay, no problem. But there is a lot of other services that are required in order to make the whole system works. One of which is, for example, the Oracle system, saying how much something actually costs across blockchains. Ethereum, if it is in 5 blockchain, more, but just to example 5, needs to have the same price all over. And if it's traded on some exchanges, the centralized exchange, which are off-chain, needs to have the same price. If it is $3,000, needs to be $3,000 every single time. And if somebody transact, so buy and sell on a centralized exchange, that price need to be streamed. This price variation needs to be streamed across blockchain and across centralized exchange. How that is done? With oracles. This is one of the Oracle services. It's just one. There's other, but this is the simplest one to understand. Okay, imagine if you can use the same philosophy of staking, but for oracles. So you help with your Ethereum process this price updating and incoming price change processing and outstreaming price update to everyone in the network. If you have the same process of your same idea of you doing staking, so basically you need Ethereum, you need a software, put them together, and then you are able to do this service instead of actually have just a software that is paid something, because the oracles are paid to actually do that job, right? To stream price, to update price everywhere. They are paid something. Instead of being paid, imagine you can use the staking system. Well, then you start to have an extra yield, an extra rewards coming out of this. Because staking system is a way for a software to basically function, do its job, and to be paid for it, and distribute the rewards across multiple investors. Okay, we can see this kind of as this. Instead of actually having a company doing that job with their own software, with their own treasury and being paid for it, you are now decentralizing the Oracle service. And you have also, and this is just for the Oracle. Now imagine for the data storage. The blockchain is effectively a database, and that database needs to be stored somewhere. And if today you have a huge amount of data, what you do, you go to AWS, you go to Google Cloud, you go to Microsoft Azure, you pay them a retail service, you pay them X every month, they give you the space, and you can store your data there. Now imagine doing the same thing, but decentralized, and the processing of all those transactions, storage of data, changing the database, and so on, is done via staking mechanism. So again, there is this idea that business is done decentralized. And so you, Francesco, and Davide put your Ethereum in that side of the business, and you take out a percentage, a rewards out of that, because you help that company do the job. Instead of giving money to those big tech firm, you now give it to a decentralized system that is redistributing the rewards. Does it make sense? I hope it did. It's a long and technical explanation, but
I am scratching my head, Marco, and I'm going to have to revisit this in my own space. So I'm just thinking of what the average viewer would make of it, including the two MDs that I was alluding to in top level finance and what they'd make out of it. I think we have to unpack this into. I think we need a dedicated seminar on this, quite frankly, maybe a few visuals and get into the flows, mechanics, in all directions. But nevertheless, thanks for the synopsis. Thanks for illuminating us as always. And we're now well over an hour, so I think we should probably hold it there. I wanted to cover a bit of Solana. There's plenty happening in that space, good and bad, or not so bad. Not so bad, I guess. But Marco had some challenging thoughts in that regard too, which I thought it'd be good to share with any interested viewers. Any closing remarks, thoughts from anyone, guys? I think otherwise we can just close it there for the week.
Oh, I think we can save some for next week. We'll still have a lot to say.
Yeah, let's save some goodness for next week. Follow us on Twitter, on Telegram, and on YouTube, of course. Anyone that wants to know more about what our thoughts are, guys, and see you next week.
Yeah, thank you, everyone. Don't forget to like, comment, subscribe, and we'll see you next week.
cheers, guys.
Thank you.